Everyone thinks a crash arrives with a bang. Sometimes it's a whisper that devastates a generation. The turn of the millennium promised endless digital horizons. Young entrepreneurs, armed with nothing but a laptop and an idea, became overnight paper millionaires. Companies with zero revenue and vague business plans commanded billion-dollar valuations. This was the dot-com bubble, a period of unprecedented speculative frenzy. Money flowed into anything with a com suffix, driven by the belief that the internet would fundamentally change everything and that profits would follow eventually. Valuations soared to absurd heights. Pets. Com, for instance, selling pet supplies online, spent millions on advertising, including a Super Bowl commercial. Yet it struggled to turn a profit, burning through investor cash at an unsustainable rate. The Nasdaq Composite Index, heavily weighted with tech stocks, became the barometer of this euphoria. From 1,000 points in 1995, it rocketed past 5,000 in March of 2000. Everyone felt like a genius. But the underlying fundamentals were hollow. Many of these companies lacked viable business models, relying solely on future potential and venture capital injections. The party couldn't last forever. On March 10, 2000, the Nasdaq reached its peak. What followed wasn't a sudden explosion, but a slow, agonizing bleed. Investors began to question the astronomical valuations, pulling their money out. The bubble burst. By the end of 2000, hundreds of dot-com companies had gone bankrupt. Pets.com famously liquidated just 268 days after its IPO, a symbol of the widespread collapse. Millions of dollars in investments evaporated. Many individuals who had poured their life savings into speculative tech stocks saw their portfolios decimated. The illusion of easy wealth shattered, leaving widespread financial ruin. The aftermath was grim. The Nasdaq wouldn't recover its March 2000 peak for another 15 years, finally surpassing it in 2015. It was a stark lesson in market psychology and the dangers of irrational exuberance. Yet from the ashes of the dot-com bust, resilient companies like Amazon and eBay emerged stronger, having survived the purge. The internet's true potential was eventually realized, but not without immense pain and a crucial reevaluation of value. Explore another tale of speculative frenzy and financial collapse in our next video.